So the future order book, that's a metric that's traditionally used by apparel and footwear companies. It represents the value of products that retailers have committed to buy for about the next 6 months. And what Evercore ISI was saying, and I couldn't find anything about this myself in their earnings report, but a lot of these analysts have calls with Nike executives and even have like special access to their books and stuff like that. So take it for what you want. But Evercore ISI says the order book right now, for the first time in 2 years, is showing revenue growth. And what that could mean is that the next 2 quarters, by the end of this year, if that's true, Nike could already be in the revenue growth year over year category, meaning they're going to beat their own goals. So,
Nice. So good
yeah,
time to buy.
right. Their price target, their 12-month price target on this is $90. I think it's trading at 72 right now.
Not
So,
a bad return.
right. So that's my checklist. That's what I want to look at as far as Nike goes in the future. That's what I'm seeing right now as far as the progress goes. My concerns primarily lie in that 26% revenue decline for digital sales. I don't know about you, Dave, but after the pandemic, I was like, I want to go out. I want to go out and buy stuff. If I'm going to buy stuff, if it's going to be brick and mortar. And now I'm kind of back to Amazon.
uh, yeah, I was like that at first, just like you. And I initially had lost some weight right away. Like, let's get in shape. Let's go do this. And then, I got lazy again, had my surgery, and I was out bed rest for a while. But now I'm back. I'm back to, I want to be outside. I want to be brick and
Sure.
mortar.
Sure. And
I
real
still
quick,
buy stuff on Amazon, don't get me wrong. And I still buy stuff online and have it shipped here. But if I can, I'll do brick and mortar. Just, keep, I don't have my daughter at home anymore. I'm
right.
an empty nester, so I like getting out of the house.
Yeah, you might be one of those. I don't know. Where do mall walkers go now? Is that still a thing? Or do you just go to
No, because there's
IKEA?
plenty of parks and they just walk around the neighborhood.
Okay. All right. Well, one last thing I wanted to touch on before I hand the show over to you. Friday, when the US and China deal talks, the framework in place for rare earth metals, almost all of the miners across the board declined, including Newmont Corporation, whose primary revenue driver is gold, and they do have some copper and silver and zinc and lead in there too. But as far as rare earth metals go that drive, technology like lithium and such, they don't even report those. So if those exist, they're small enough to where they're not even on the earnings report for them. And somehow the stock declined 5% on the news of the trade deal. So you might want to take advantage of that. I would say buy in on Newmont. I think it's still set up very well. Interest rates from the Federal Reserve level have nowhere to go but down. That's going to drive the price of gold higher. Government spending continuing to go up also drives the price of gold higher. Uh, I think it's in a good position, so I would buy it.
Gotcha. All right, Brandon Beaver making the call.
Yeah. I've held it for a
Newmont.
while. I'm up quite a bit on it already, just so you know. But I
He
think it's
wants you to
still
buy one of the stocks he owns. Got it.
exact. Well, I mean, I own both of these stocks, so just foot, footnote
I'm
that.
joking. I'm joking. All right, cool. Talking about a stock we own and wanting you to buy it as a listener. Let's move into GE Vernova,
Yeah.
right? Brandon and I both publicly own GE Vernova. There were some headlines on it, and it caused me to look into GE Vernova. So let me read the headline, and then when I looked into the latest news, because I haven't looked at it in a while, I own it, and I don't watch it every day because I believe in the company, and I don't feel like I need to. But let's get into this headline, shall we? GE Vernova explores sell Proficy software unit. I think I'm saying that wrong. Bloomberg News reports. U.S. power equipment GE maker GE Vernova is exploring the sale of its industrial software business, Proficy, in a deal that could fetch as much as $1 billion. This is what Bloomberg News is reporting. Demand is expected to Vernova's is benefiting from surging domestic power demand. Demand is expecting to hit record highs in 2025, driven by, AI, cryptocurrency, data centers. So some of these assets, such as the Profici software unit, could be sold between 900 million and 1 billion. Companies working with advisors has reached out to industrial software firms and private equity investors looking to according to Bloomberg. GE Vernova has declined to comment on the story altogether. Right. So I was like, all right, well, I mean, what is this software unit? Let me look into GE Vernova, see what's kind of going on with the company lately. So the first few headlines, I when I go into the news section, I use Fidelity when I want to begin a deep dive into a company, if you will. I use Fidelity, and I love Fidelity. I've always used Fidelity. I think it's a good company for it because there's a variety of things you view on it.
Yep.
The first few headlines. So you had the Explorer sale of Profici software unit, first one. Then you have Siemens Energy targets U.S. transformer production in 2027 to expand their transformers and energy systems. Positive for GE Vernova. Then the next one is GE Vernova to support modernization of Rio Tinto's hydropower plants. Positive news for GE Vernova. Morgan Stanley maintains an overweight on GE Vernova and raises its price target. Positive news on GE Vernova. You get where I'm going with this.
Yeah, yeah.
It's all positive news. You had Morgan Stanley raising it. You had Japan's industry ministry making a deal for wind power. Wind power uh, on this. GE Vernova has a third quarter dividend that is going to be paying out. Everything is positive. This stock has nowhere to go but up, Brandon, and I don't see an end to it continuing to rise. Given even though, and I'm a big person, a believer in looking at the PE ratio of a company and using it as part of the puzzle, just one piece of the pie, just to kind of get a better out overview. The PE ratio is at 73. I believe is actually going to grow at that rate.
Yeah, I agree too. I mean, I think that what people need to know is that they make the gas turbines that are being used to power most of the data centers utilized for artificial intelligence.
Right, exactly. Right, you said it all. I don't need to say anymore.
Yeah.
So even with so this new headline that they're selling a software unit, small potatoes compared to the main business here. I believe this is just for them to focus and use that cash on hand to grow the other business that actually is producing the income and the revenue for the company. So this all is a boon to GE Vernova, if you ask me. The stock was up 2.5% on Friday. A lot of stocks were up on Friday. It was a good news day for the market as a whole. I believe GE Vernova is again. I'm just going to continue not to really watch it day over day. It's going to continue to grow. There's nothing but good news here for them. I don't see any downturn, especially as the AI environment continues to expand.
Yeah.
Lots of news there on AI. I mean, I found article after article or after article this whole weekend, Brandon. I think I read like probably 30 articles on different AI stories I could have mentioned today.
Yeah, you know what? One of them that came out last week was, and I saw this again as a clip on CNBC. A This is a Chinese startup called Zipu or Zipu or something like that.
Okay.
And it's again, it's another kind of artificial intelligence company that is making deals with the Chinese military and Southeast Asia and all kinds of stuff. And they're saying that this is a huge threat to American artificial intelligence. And they even listed NVIDIA like as a stock ticker when they were talking about AI and the threats and stuff like that. They showed NVIDIA as being threatened by GPU, I think is what it's called. Well, I looked into this company and guess whose GPUs they're using for their systems, and it's NVIDIA. They're an NVIDIA customer. By the way, so is DeepSeek, which is why, or DeepSeek or whatever you call it, which is why NVIDIA was like, ah, yeah, that's fine. We're cool with it. Because they're using NVIDIA's clocked down GPUs that are being shipped to China. So again, not a threat in my opinion. Maybe to Llama, maybe to
Right.
Meta's Llama or to OpenAI, but not to NVIDIA.
Not a threat, not a concern, not a worry.
Right. You have completely frozen, Dave. We may be having our first technical issue in our YouTube era.
Off in articles and on social.
Hey, Dave, you completely froze. I didn't hear anything you said. Hey, are you there?
Can you hear me?
Yeah, I can hear you.
All right.
We're
I'm
back.
gonna continue talking.
Okay.
You might have to edit a little.
That's fine.
So
It's going to be on YouTube because I don't know how to edit video, but whatever.
nice. All right. So what we have is, insiders, so executives at the company sold $1 billion worth of Nvidia stock, and that they were saying that was a big deal, and look, they don't believe in the company or something like that. This is what I was seeing on social media when I was reading the article. That's a drop in the bucket, people, and they have to register this well ahead of time. If they're considered a true insider in the company, they have to register with the SEC that they're going to sell, and it's done in advance. Everybody knows it's coming. The true big banks already knew that they were going to sell. It's $1 billion. So Nvidia's current value is $3.8 trillion.
Above Microsoft.
And so $1 billion worth of with their stock is not it's a drop in the bucket. And hey, good for them. They earned it. They were probably there at the beginning, and now they're gonna go fund whatever they want to fund with that money. That's their money.
Yeah.
So
I can see a path forward to probably being the world's most valuable company if they continue their dominance.
right, they might be worth more than all of BlackRock here soon.
Yep.
All right, so I want to go over some quick numbers. Gonna hit you with like a lightning round type thing. Brandon, are you ready?
Yep.
Here we go. Personal income was down 0.4% in May. That was below expectations. Sharp declines in proprietors' income, so business owners, transfer receipts, lower rental income. All of this was offset by a 0.4% gain in wages and salaries. So business owners, rentals, they all took a hit on their income, but wages and salaries jumped up 0.4%. Personal consumption expenditures fell by 0.1% in May after a 0.2% in April. These are very minimal movements here. I don't know why this came out like we're like reported as big numbers here, but I'm going to report them anyways. Goods spending was down 0.8% and services spending was up 0.1%. It's really flat. So personal consumption on spending on goods and services flat is what I'm going to say. It's flat. It's such a small, minute movement one way or another. I'm not concerned about it. Core PCE prices, consumer price, rose by 0.2% in the month after a 0.1% gain. The year over year rate went up to 2.7% from 2.6%. Any concern there, Brandon?
No, no concern. I just think the Federal Reserve, it's we're getting to the point where they can lower interest rates. I
Yeah,
don't see
right.
why not.
As you hit 3%, I mean, that's definitely a signal to lower interest rates.
Yeah.
University of Michigan Consumer Sentiment Index. So, consumer sentiment, I've been complaining about on my soapbox on this show here for a while now. In June was actually revised slightly higher. So it's gone up now instead of down. It went up to 60.7. May's reading, it's well above May's reading at 52.2. What happened to the consumer sentiment, Brandon? Is consumers happy again?
I
Are
guess.
they happy now?
My favorite thing about the April Consumer Sentiment Report was that in the same report, in the same article that I read about it, and they said that people were rushing out to buy new cars before the price increases.
Right? All those people are hating it right now.
Yeah.
Here's some news I do want to talk about, and this is the Feds. So each Federal Reserve Bank has a regional bank, right? So I'm going to give you the Atlanta Fed and the St. Louis Fed for their Q2 GDP estimate, right? So the quarter two is getting ready to wrap up here in the next couple days. The Atlanta Fed current GDP Q2 estimate is 2.9% gain. It's revised down from a 3.4% gain. All
Okay.
right. The next and that's going to be redone again this week. It gets redone every week, but St. Louis Fed GDP estimate is for Q2 is a 1.02% gain, revised down from a 1.46% gain. My question is, two different regional banks have that's a big discrepancy between their Q2 GDP estimate. How can they be so far off?
Between the two banks or
Yes,
between
the Atlanta Fed and the St. Louis Fed. Why are they so far off? One's almost at 3%, the other's at 1%.
because the experts know nothing. That's why they
I mean,
don't.
I agree. I agree. The experts know nothing. And we listen to these experts and we buy and sell stocks based off what they say, and they can't even get even close to agreement on an estimate.
I read estimates based on individual companies from a very select few experts that I trust, like CFRA, for example. Um, as far as buying those companies and things like that all comes from me. That's all my ideas that I generate on my own. I don't listen to hardly anybody. Um, Sometimes to my own peril, Dave, as you know, because you've recommended me stocks before that I don't touch because they're not in my knowledge base. But no, I just the experts. There's forecasts left and right. Most of them are never on. Most of the forecasts that they put out there are not gonna hit, including, by the way, Evercore's $90 price target on Nike. That just shows that they're bullish, but it's probably not going to hit Nike. It's gonna not $90. It's probably not going to do that. Maybe it
Maybe it
goes
goes
above.
100, dude.
Maybe it
Yeah.
goes 100. Maybe, possibly, but $90 is probably not going to be where it lands. Exactly.
Right. And so yeah, this is why like when the Fed, I mean, they get together, they have their meeting. Atlanta and St. Louis got to come in between somewhere.
How
Yeah.
many of us thought there was going to be a recession by now, including me, by the way?
Yeah, that's a good question.
Yeah.
You,
Economists, everybody thought it was going to be a recession by now. It's not.
Not me. I've
So,
been very
well,
vocal
I
about that
mean,
on the
yeah,
show. I
you,
said no.
you and
No
Tristan
recession.
Huff, you and
Yes.
Tristan Huff, which I promised I'd say I'm sorry. That's how far that's going to go.
There you go. See, so there's two of us that you knew that we said no, no recession.
Yeah.
I didn't see any evidence of it. All right. I want to leave here one last quick thing here, Brandon, and to talk about Rick Edelman. I know I got like 1 to 2 minutes here. That's all this is going to take up. I'm
Okay.
going to be very quick with this. Rick Edelman, he's a financial advisor. A lot of people listen to him. He has come on and he has said it's time for a rebalance in their portfolios, right? Typically, you have these 60-40 portfolio model, 60% stocks, 40% bonds. He said that's how it's been for majority of time in the United States as a financial advisor. And he says it's time to reevaluate and change that. He has now come out and said recently that financial advisors should be recommending anywhere from 10% to 40% allocations to cryptocurrencies, Brandon. Cryptocurrencies. He's saying that this is where the world is moving. These are now passing through legislatures. There's bills going through. These are now being part of the system. Governments are now holding cryptocurrency positions. Bitcoin is now going to be held by governments, by corporations, by all kinds of businesses and individuals. You need to own part of the pie. Life expectancy in the U.S. has risen from 47 in the 1900s to 85 today and is projected to potentially reach as high as 100 over the next 30 years if technological advances related to medicine proceed. So doing that, that's the main reason why he doesn't believe the 60-40 stocks bonds is going to last for your lifetime. So you need to have something else in there, and he believes crypto is the answer. He goes on to quote to say Bitcoin prices do not move in sync with stocks, bonds, or gold or
Right.
oil or commodities. And thus, because of that, there's that's something extra that you can add to your portfolio. Thoughts, Brandon?
It used to move in conjunction with the NASDAQ, but it's broken away from that recently. I do think that, like, if you could take time to educate yourself on the blockchain, I don't mind people owning cryptocurrencies, but I tell you, these financial advisors that hold strict to these certain percentage ratios, just there's a reason why they underperform.
That's true. Yeah.
If you find a stock that's undervalued, you buy it. And you don't
Right.
worry about the 60/40 crap. The funny thing is, as I was actually looking at my portfolio a couple of days ago, and I realized I'm at 60/40 right now. Um, if you include my bonds with my cash, so
Okay.
60% about stocks and then 40% cash and cash derivative investments and stuff like that. It's not on purpose. I didn't do it on purpose though. And if I break away from it, I don't care, and I probably will very soon.
We have a individual in our chat group that we have, our stock chat group. Um,
Yeah,
and he has so many different dividend paying stocks that he gets a dividend money coming into his investment account
that's awesome.
every week, and that's his way of growing his
Yeah.
account.
And there's good strategies. There's different ways to skin a cat, right? Like you
Yeah,
can do it multiple different ways, however you want to do it. And if 60/40 helps you feel psychologically like safe with your investments, and that's fine. That's cool, right? But I don't care about it. I've never cared about that kind of diversification. I don't even really care that much about diversification, to be honest with you. I'm diversified right now on accident again. It's not on
the
purpose, but I am.
Yeah, you really don't care. I will agree with Brandon on this. He just kind of he buys when he sees an opportunity, and then he sells when he feels it's reaches full
Yeah.
potential,
Yeah.
or there's something else better.
I do rebalance from time to time, like after Nike's 18% 2 day gain, and I saw that it had more value in my portfolio than Google and GE Aerospace. I thought to myself, that's not right. And I sold a couple of shares to rebalance. But
There you go. All right, Brandon, it is that time of the show. Final thoughts.
Nike is a dip your toes in and wait and see kind of thing. It's going to require a lot of patience at this point. Newmont Metals is a buy. It's a good setup. The government spending is not slowing down, even with Trump in office. The government spending is not slowing down. Interest rates from the Federal Reserve have nowhere to go but down. They're not going to increase them. That wouldn't make any sense. Um, and Newmont still does very well above $2,000 an ounce. So, and we're like above $3,000 an ounce the last time I checked. So I like Newmont Metals. I like Nike right now, but moderately be safe with it. And as always, buy Nvidia.
Right on. I like that too. I will say this. I mean, you know, I do like this Jim Cramer saying there's a bull market somewhere. Um,
Yeah, all the time. I mean, almost all the time, unless we're in like a Great Depression or something, or financial
right.
recession of 2007.
And so, just take your time, find your investments, find your right foot in. You don't always have to listen to the quote unquote smart people in the room there, the feds or the analysts on TV or Evercore or whoever else. Take your time, do your research. You'll find some good opportunities. We just tried to do this show to help people as much as possible. You would not believe how many people Brandon and I have helped get started in investing, and now so many of them have good amounts in their investment accounts. I work with people every single week in, week out, that are just now starting with their investment accounts. They get going, they build it up. The goal is not for them to be needing us to continue it. The goal is for them to get to a point where they can learn how to do these things on their own, and
Right,
that's our goal for everyone. So
right.
that's why we tell you how we come to these conclusions. Brandon goes in detail. I kind of do a quick overview of macroeconomic events. He does a more microeconomic fundamental events. Together, that's a yin and yang. You get a
Yeah.
full picture of how to view the markets and view things, and that's why we do the show the way we do it. But we hope you've learned. We hope you invest. I hope you buy Metsera because that pharmaceutical company I believe in, and I believe in its future. That's my call. I'm going to continue making that call on Metsera. I think that's a good one to have. Um, but yeah, dividends, Ben, BEN, ARCC, ARC. Those are ones I own for
Yeah.
dividends. Since I mentioned some
Yep.
dividends today, Mo, I own Mo, but I don't buy anymore. It's high value. The dividend percentage, the percentage is the payout is dipped down because the stocks jumped up a lot. So I would hold off, but keep it on your watch list. So that's one I would add to your watch list if you're interested in dividend stocks.
From my end of the show today, my half of it, the most valuable thing that you could probably take away from it would be what my mindset is looking into the turnaround play of Nike. It's not even like if you were to buy Nike on Monday morning, that's not going to be the most valuable thing that you're going to take out of this. It would be what I was looking at, how I was evaluating the stock, and what my mindset is. I would much rather people learn from this and then buy stocks on their own than buy stocks that we recommend and then not know what to do with them after.
Right? Exactly. Exactly. All right. We're going to leave right there. All right. Thanks for listening. Please hit the subscribe button, hit that like button, share it as much as you possibly can. We hope that we have been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.